Hello, welcome back to the MonitorBase Rockstar Retention videos here on our blog. I'm Lily Standiforth.
I'm William LeBaron.
And I'm Louis Zitting.
Today we're talking about getting ahead of the mortgage credit trigger.
So kind of the question that sparked this was, what is the value of being first? And with our mortgage credit trigger, we worked really hard. We now have that running where we are real time, within seconds. But is there something better than that is kind of the topic of today's conversation. What's better than knowing the moment someone enters the market? One of the reasons that's actually a relevant conversation is because credit triggers have been taking a ton of heat lately from multiple angles. You have at least two pieces of legislation that are proposed that either ban or restrict credit triggers. And then you've also had a bunch of pressure within, multiple different organizations and collaboratives and groups that are just really bringing up some of the problems that we've seen that are just some really unscrupulous practices, right? And so everyone's having, at least in this current space where there's a shortage of business and everyone's fighting over a smaller set of opportunities, the amount of pressure in the room, the temperature has been going up. And because of that, credit triggers have gotten some bad press. And so it's caused a lot of uproar, and which kind of brings us to the conversation of what we're trying to talk about today, which ultimately credit triggers are happening less often. There's just less activity in the market overall, less mortgage applications happening, less opportunity. More people are using softwares like SoftPull in order to avoid triggering a credit trigger early. And then you have people going through, what was the other one? And then you have lots of lenders who've adopted the practice of prompting people to opt out of pre-screen just to avoid the credit trigger altogether. And so with that kind of a circumstance, that's really the platform from which we're starting this conversation. That's what we've been seeing over the past couple of months.
So I don't think that the mortgage trigger is going to go away anytime soon. But still, the point is, more and more people are figuring out how to prolong that. I mean, just the cost of a credit report will make a loan officer decide to wait longer, right? So, and that really kind of brings us to kind of our original philosophy of the whole company and why we started it was the predictive analytics side of this, right? And that's really meant to be the upstream version of this, and the trigger is to catch anything that's missed.
From our origin here at MonitorBase, we started in 2007, and our goal has always been to leverage the relationships that you've built. Our goal has never been to bombard everybody that has had their credit pulled for a mortgage. Our, goal has been to give loan officers data about the people that they have built those existing relationships with and continue those relationships with valuable service from the loan officer's side.
Yeah, and so really, the inquiry alert is being reactive and the predictive alert is being proactive. We're trying to get you, that consumer, upstream of the mortgage inquiry.
So while the trigger alert or the inquiry alert, as we call them, are still valuable, if you imagine that funnel, and the bottom of the funnel is people who are having their credit pulled for a mortgage, ready to move forward, that's still valuable. But if you think about the best time to plant a tree, for example, that's 10 years ago, where you already have a tree that's flourishing and has been growing and digging roots deeper into the ground for 10 years. But the next best time is today. So if you think of this in terms of trigger alerts in that funnel, the best time, if you haven't reached out to one of your people that you have a relationship with, is today. That's the best time if you haven't before. But if you can get in front of that contact or that client even beforehand, that's the best time to reach out.
So part of, I think, I like the metaphor. Part of the thought process with predictive is we're notifying you 90 days before it's likely they're to take action. They are to take action. And so it's giving you the opportunity to begin nurturing, to begin engaging, because, if you don't do anything after we give you a predictive alert, you're still going to get the trigger alert. You're still going to know when they start the loan with someone else. So we were looking at the statistics for January and February this year, and what we saw was, if you look at the time window, 75% of our inquiry alerts had a previous prediction, meaning our inquiry alerts in 3 out of 4 cases would have had an earlier warning if you were using both predictive and inquiry. And, it's nice to know inquiry, and everyone likes that, and it makes sense. They like it because it's their customer, and they know them and trust them, and now they know they're in the market. But when we can narrow it down and say, hey, these are the ones you should be focusing on, and we're catching 3 out of 4 of those opportunities before they're in somebody else's pipeline, before you're having to work to get that person to come over and give you a chance to give them a second opinion, your chance of winning the deal is significantly higher. And so it's the tree metaphor. The best time to plant a tree is before they just had their credit pulled for a mortgage with someone else. But the next best time is today. Once they have their credit pulled, now engage. So we're giving you that earlier opportunity using the predictive models.
Yeah, and I want to add to that having both on at once is actually going to improve the value of both of those alerts. You'll have a better cost per deal overall if you have predictive on with inquiry than if you have just inquiry or just predictive. If you just have predictive, then there's going to be some of those, kind of slam dunk deals that you may have missed that didn't respond up front. And then if you just have inquiry on, then you're competing with every single one. So you're also going to lose some of those slam dunk deals to a competitor.
So one of the things that we've seen predictive performs particularly well on is a lot of people aren't picking up the phone and smiling and dialing and calling all of the alerts. They want to rely on automation, and we completely understand why. So if you're relying on automation and we tell you Louis just had his credit pulled for a mortgage, and you're just going to let an automated email system go out, you're a little bit late. And so predictive is giving you that 90-day notice, right? And over the next 90 days, if you're dripping and nurturing that through an automated system, your likelihood of being able to successfully automate that pre-engagement outreach is significantly higher. Whereas, if you're just relying on automation for the triggers, you're going to miss a lot of opportunity because those people, they're already in someone else's pipeline. They're being pulled along. Unless you do something to kind of shake things up, those people are going to continue on the current course that they're on. So it lends itself better to an automated system as well.
And that's something that a lot of people might have a question about is they are familiar with the credit trigger. They know what to do when they receive a credit trigger notification. They know how to act. But with this early warning, this predictive, the client may not have taken an action yet. They may not have applied yet. So there's this question looming in the air of what do I do to engage with a predictive alert?
Yeah. So, you want to approach the predictive alerts different because fundamentally they're quite a bit different than an inquiry. With an inquiry, somebody's applying for a mortgage. They've made the decision in their head. And so if you call them, then yeah, the answer is yes, I am in the market for a mortgage. With a predictive alert, we're slightly upstream of that. If your approach is to call them and say, hey, do you want to do a mortgage today or try to get an app? Then a lot of the times they're going to say, no, I'm not really interested in doing that today, right? But that doesn't mean that they're not going to do something in the coming month or two. So really with predictive, the goal is just the connection and making an engagement with as many of them as possible. And to keep it simple, like a little call, text, email, however you normally engage with them, and just have a simple conversation, right? Like rather than an ask, then have something that you can give them. Maybe it's, here's some market information for our current county or some changes that recently happened, maybe an update on the NAR lawsuit, right? So if you're taking them some sort of a gift of useful information or value, that's going to be much more well received in a time that they may not be ready to take an app, right? That's coming shortly in the near future. You just want to make that connection and be, in their mind as that professional. So when the time comes, they're like, oh, you know what? I was just talking to them. I'm going to give them a call and I have their email. So I think a lot of you probably remember Greg Frost, super great man in the industry. He would always tell me, be the first to give. And I mean, it's as simple as that in this kind of a situation with your predictive alerts. Call them with something to give, and that's, you know, the conversation is going to be much more well received than if you call and ask, are they ready to do a mortgage app?
So the other thing, guys, is don't stop on the first day. When you're doing outreach, and this applies to predictive alerts and to inquiry alerts, when you're doing outreach, you don't expect that you're going to get on the call and take an application and your job is done and that client is closed and it's over. You know, for predictive in particular, it's a 90-day window. Call and engage them in a conversation and check in and see what they're up to and do the value that Louie's talking about giving. Have that conversation and connect with those people. But if you don't reach them, which in most cases you won't on your first attempt, try again. 2 weeks from now, 4 weeks from now, 2 months from now. Set those things up. If you have a plan for how you're going to do that, you'll get so much more out of this. Because if you call me this week and I'm busy and things aren't looking good, or I'm on vacation, or any other number of things, because it's spring break this week and I'm spending time with the family, and you give up because I didn't respond to your call, you've missed an opportunity that just a little bit of persistence can get over. And so, you know, don't gamble everything on the one phone call or the one email. Set some reminders, do the additional follow-up. And again, I said this applies just the same for inquiry as predictive. Things can change in someone's life quite a bit in 30 days. I always tell people with inquiry alerts in particular, if you call me the first day that I have my credit pulled with someone else, everything's going great, no problems, I don't need any help. By 3 weeks in or 4 weeks in, when this loan officer's dropped the ball, or I'm having some issues, or they're not communicating well, or I'm running into some sticking points, that second phone call is a completely different, I may as well be a different person for how that second phone call is going to go. Right, guys? So don't always live as if that first phone call, it's done and over with. Call and check in. Hey, I just want to make sure everything's still going great for you. If you need anything, let me know. It can be that simple. So don't rely just on the first attempt.
Yeah, and also on that point, you know, we look at the stats of different users and who's converting better, and it's that simple. You know, some users will get 10 times the engagement rate on their predictive alerts, and it's just because they have a simple try kind of system in place, or just a habit of, I'm just going to try with each of them, and I'm going to set a reminder to shoot them an email or text 30 days later, and then again 30 days later, right? So I don't think it needs to be this huge perfect sales pitch. Just you know, doing the attempts is going to up your engagement multiple times, and a certain percentage of those predictive alerts are going to be in the market. So really your only job is just to try to connect.
This getting upstream or getting ahead of inquiry alerts, trigger alerts, is really where we're seeing the future for this type of a product in the industry. You're fighting competition, you're getting ahead, you're nurturing those contacts, and that's what we really wanted to stress today. If you're a current MonitorBase user and you're looking for more tactical tips to help you really dial in your MonitorBase usage, then be sure to join our monthly coaching call, which is the first Tuesday of every month. We'll include the link here on the video.
And for that coaching call, guys, our goal is to help you guys get up and running and optimize. And so we're going to be there having conversations, coaching you through the process of wherever you're hitting sticking points. And Lily mentioned it's just for our users. Our hope is that by making our expertise in our own product and in what is working available to you in some collaborative space for anyone that wants to join that's using the system, we're going to be able to help you get more success out of our platform. And for new users, get up to speed and running quickly, more quickly. Previous users, people that have been using it for a long time, figuring out what other people are doing and what's working. Because we have conversations with all of these people and these users and these teams individually, but we don't always have a great way to share that within the group. And that's what this, that's the objective for this particular call.
Thanks for joining us today, and be sure to subscribe to our blog for more Rockstar retention tips.
Thanks.
Thanks, everyone.